Okay, guys, so welcome along. It is Wednesday, the 11th of October, 8 p.m. UK time. And we're about an hour ago, we had FOMC meeting minutes. Not too much movement, to be completely honest, but this week's been a really, really crappy week in terms of news. The typical news events I like to try and avoid are FOMC, CPI, NFP, that kind of thing. And it's kind of just thrown us all about a bit. I mean, a lot of just random slow movement today. As Rachel says quite rightly, it's probably waiting until Friday. It's going to make some sort of massive move in a certain direction. But, this all happens, once a month. And at times we just have to know when to, if we're entering trades, when to enter with considerably less risk or to just sit on the sidelines completely. Um, so, I was looking, I've still got this entry here set on EU. I am looking to take this. I'm just going to try and target a 1 to 3. Now, in a very bearish environment, let's be honest, we're very, very bearish in this situation here. And I'm entering on a 4 hour time frame in here. It's going to take a while to get there, I think. I was hoping today's price action would take us to the upside, but it quite clearly hasn't as of yet. I'm basing it on a few things, and what I'm basing it on is that we're pretty bullish at the moment, and I feel like this is going to give us a nice reversal on a higher time frame. We've got imbalance within there. We're working within an order block, which is an FU candle, which swept this liquidity here. We are also in our kill zone with our OTE trading levels, and also what we could potentially have in here. If I turn this week on here, you can see here we're trading higher this week. Now, usually we get high and lows of the week on Tuesdays, Wednesdays, Thursdays. I would love it if we got triggered in here tomorrow at the latest, really. So this would be the high of the week, which would essentially mean that we would end up on something like that for the week. That might be a possibility, but obviously we'll wait and see. Now, people have said to me, what happens if it reverses and goes higher? Because obviously, look, we are starting to push higher on the daily and things like that. Well, if that happens, the answer is very, very simple. I lose the trade. Okay, I lose the trade and there's nothing you can do about it. When you're trading this low, at some point you are going to have to suck up a loss because you're not going to get it right every time. And it is going to start reversing, ready to start making a move to the upside. Now, that doesn't mean to say I'm not going to give it a go. I will give it a go, but I just have to kind of be aware. Because when we look at the weekly time frame here, I am expecting a retracement at some point. So, it can happen here and retrace and then start moving lower, or it can go a little bit higher, or it can just completely start dumping to the downside. And that there is obviously something we have to kind of bear in mind. Now, this morning or today with New York session or London session this morning, I spoke about saying to you guys, what are you struggling with? And this was to the premium members. Obviously, I appreciate all members are here now. My question to you guys was, what is everyone here struggling with? And if you're struggling with a certain thing, I need you to let me know so we can work on it tonight. Now, I had a lot of people message me. I haven't got around to answering everyone back about certain things they're struggling with, which is absolutely great for me because I'm going to basically be able to get around to teach all those things in the coming weeks. Now, I won't be able to do everything tonight because we've only really got an hour or so to do it, and it can take longer than that to happen. So if I haven't replied to you, I will get back to you as soon as possible about basically putting on that lesson for you. But one thing I feel a lot of people were looking for help with as a collective group was market structure. So I thought really it would be a good way to kind of talk a little bit about market structure and what it kind of entails, how it works, and really, really put that in with liquidity and things like that. Hopefully that's kind of okay with you guys. I know that a lot of people were sort of talking about different things here and there, but predominantly I think most of you did come out with the, saying you're unsure on, starting on a monthly time frame, and then you'd have no idea where you are in respective nature to the 1 hour time frame or anything like that. So hopefully that's going to kind of give you a little bit of guidance on that. Now, I don't know who here has watched, because this is available to everyone, the course on market structure. Here we go. I've got a comment here just really quickly. Hi, probably sometimes I'm still struggling with understanding the trend direction. What is your checklist? Okay, we can talk about that. So here's the thing, guys. We want to trade in direction with the higher timeframes. Now I'm going to draw a basic area of market structure. Now, this is a trend you want to be a part of because you want to be clearly selling in this price action here. Now, let's say this happens to be a monthly time frame or even like a weekly time frame. So this is a weekly time frame. Now, you are not using the weekly time frame to actually physically take your entries. You're using the weekly time frame to try and identify where price is going. You have to remember price moves in cycles. It moves up and down in a bearish environment. In a bullish environment, it moves like that. And if this is happening on daily time frame, you're going to get something like this when you add it to the weekly time frame. So what it would essentially start to look like is on your smaller time frame in a weekly environment, you're going to get something like this playing out here. And obviously that is what we need to start trying to analyze and look at. And I'm going to talk about entries within these time frame areas and things like that. But essentially, we're trying to gauge what is going on in these areas here, how we can look to take advantage of it. And it all comes down to the same thing. It's all about targets. Because truth be told, if you are bearish on a weekly environment, let's say, for example, you are bearish at this area here. So we have hit a weekly area, maybe some kind of PD array to the left, maybe an area of imbalance. And we have gone down to a 4-hour time frame from the weekly time frame in this situation here. So we've identified the structure in this area here. We've got our break of structure. Now we are looking to take price lower from this area here, but you're not looking to take price into this area here. Like, let's say we're just looking for simple 1 to 2s, for example. You're not looking to take it all the way down to here. The very simple reason behind that is it's all because, what have I done here? Okay, yeah. It's all because price retraces. So you're going to get in the entry, it's going to retrace, it's going to come back, it's going to retrace. It's too much stress. We want to, let's say this is going to be a 1 to 2 on a smaller time frame. Ignore the risk reward ratio here. So we want to get in multiple setups until a certain point. We are targeting weekly lows. We are bearish overall. So what we want to identify is we've sold here at a premium level on a lower time frame. We're just using the weekly time frame, which is the black line here, as a bit of guidance. So what we're then looking for is to get out of the trade at 2%, 3%, 4% on a smaller time frame. Okay, perfect. So I can get rid of that now because it's not really relevant, but I'm then looking to see what happens next. And now we're in a downtrend to the downside. So what I'm looking to do is take each retracement until we hit this target here. So now I'm entering on the retracement there. I'm entering on the retracement there. I'm entering on the retracement here. And then obviously when price comes lower, I'm maybe going to be thinking about a different sort of opinion in the markets, whether it's going to look to reverse. If it looks to reverse, then obviously, we're going to want to take price in a different way. So if price does start reversing, is price going to be coming back to this area here? So if price comes back up to this area here, then I should change that back there. Then on a smaller time frame, how is that going to look? So if price action comes down to this area here, for example, on a smaller time frame, once again, you're going to be looking for moves higher. And all you're going to do is you're going to buy into this area, which is going to be a future sell area. So this area here is going to be a sell area because when we use our OTE levels, we know that we're looking within kill zones and premium areas and things like that. But we are using the weekly time frame just to identify whether we are moving in a certain direction or not. So once again, what we're looking to do now is we are now buyers in the market because we know we can target this area here for a sell. So we can get into this area here, we can get in there, we can get in there, we can get in there, we can get in here. Now, the higher probable situation is that you go in direction with the overall trend, and we can see clearly here that that is bearish. So these areas are going to be more of a better sort of situation. But when you're using a weekly time frame, this could be on a 1 hour time frame with 15-minute confluence and things like that. So that essentially, and I'm going to dive into it on the charts and things like that, but I appreciate it kind of looks messy. But if I kind of get rid of all of the buy situation stuff and just leave the sell situation, hopefully you can see how simple it can be. Yes, it will be recorded. It will be recorded and put on the website tomorrow. So if you miss anything or you want to just watch this again, you know, absolutely feel free to watch it again. So deleting that, just kind of doing it again, we know that price moves in cycles. We know that we are looking to be a seller in here. We can be a seller anywhere in here. Okay, we can be a seller anywhere in here. We can be a seller anywhere in here because we're waiting for targets to be met. Likewise, when we are trying to take price higher, we are looking to buy low till it gets to the target. We're not interested in this area here because we've taken the target. When price retraces, we can be buyers on smaller time frames until it hits this target. We're not interested here because we've taken that target. Once price comes down to the next level, we're looking to buy all the way up to here until it gets to this area here. We're not going to buy anymore. What we're going to be doing is waiting for a retracement. And this is where we then look for price to come back into these levels here. So what we then look to do is how do we actually enter the market? How are we getting into this area here and what are we using? Now, there's various models you can use to help yourself get into the market. There's a few very simple ones. There's a few ones that require a little bit more detail. I think if you're looking for a simplistic model, there's a couple of models you can use. So I like using two models in particular. One of them being a New York scalping model, which is a lot of smart money concepts / ICT people will obviously use, and that is your, you know, your 2022 model, if you like, from ICT, entering on an area of imbalance when the area has been taken out in a New York kill zone range and things like that. Not just want to, you know, say that's the only one I use. I think the most simple one you can get to use is a signature pattern OTE level trade, where essentially you are bullish overall. So let's just ignore the fact that this is a bearish move. We're looking for bullish moves overall. And what I'm looking for is price action. So let's just draw, let me do this again quickly. Let me draw a bullish environment. So we're bullish on a higher time frame. Okay, we know we're looking to take price higher. Now, on another time frame here, what I'm looking to do is identify getting into an area in this level here. So inside this level here, let's just say for argument's sake, this is a 4 hour time frame, and this can be a 4 hour, a 1 hour, a daily. It really doesn't matter where it is with that respect. There's a couple of things we're going to look for with this model. Okay, and essentially I want to know kind of what's going on with the Asian range. I want the Asian range to take the London session range to take liquidity out. I then want to see an expansion to the upside. Once I've seen that, there's a couple of things I'm going to be looking for. So this here is kind of what I'm looking for in here. Okay. So when this happens, I'm looking for a break of market structure. I'm looking for a sweep of liquidity right there. I'm going to draw this all the way up here so it's more realistic. Okay. Break of market structure, sweep of liquidity. And what I'm looking to do is enter off an OT level. So anything in here I like to see will be an area of imbalance or some kind of order block. It doesn't have to be either or. It can be either way around. It really doesn't matter in all honesty, especially when you're doing this. The important thing is your entry. So I'm going to be measuring this area here. Now, there's two areas you can enter off as long as you've got imbalance or an order block to support it. That is 61.8% or 71%. You can enter deeper if you want, but the chances are you're going to be looking to take less trades So what I'm looking to do is enter maybe, if I'm being kind of conservative, I'm going to go, I'm the wrong way bloody round here, aren't I? That's all right, I'll do that for now. I'm looking at an entry like that. I'm just simply targeting a 1 to 2 in this area here. Yeah, I know it's inverted, but I'm in too deep now, John. I'm going to have to just invert the whole thing. So we're on a, this is just think of this as buys. Okay. Now I'm looking to buy this area here and I'm entering off the 61%. Now, what time and price is very, very important in this situation. If this happens in the Asian session, I'm not going to be entering this. And that's very simply because in Asian session with our strategy, we anticipate consolidation. And with that, you usually get a bit of manipulation, random movements, things like that. So I'm not looking to get involved in the Asian session range. This could definitely happen in London session. This could all happen in Asian session with the expansion, but usually London session creates the manipulation. So London session will create the low. Usually London session then gives you that expansion. So the right thing to do is wait for the open of the New York session, because in the open of the New York session, or the London New York overlap, which is typically between sort of 11:30 UK time to 2:30 UK time, which is around about 5 a.m. New York time to 8 a.m., 9 a.m. New York time, whatever, you get a burst of volatility. So typically you get the retracement into London session and price action usually expands in the intended direction. And what this looks like on a higher time frame is quite simply this. So all we're looking to do is take advantage of the marketplace in a buy. And we're looking for a 15-minute time frame just to give us that opportunity to do it. Now, there's a couple of other ways you can look to enter, okay? And I'm going to draw them out for you right here. When you are in, again, a bullish environment, I'm going to invert this back, so it's obviously got a sell. And this is more to like my New York scalping model that I like to do. But essentially, what you can do is on a smaller time frame, just get rid of that again. On a smaller time frame, you're going to get a move. Now, if price comes into your area and aggressively expands, there's a couple of things you can do, but essentially it's going to likely leave an area of imbalance. It's the same sort of thing, but we're not using the OTE levels. Okay, you could be using this on a 5-minute entry or something like that. It doesn't even have to break structure. It can just leave an area of imbalance. Now, if it leaves the area of imbalance, all you're doing is you're re-entering on a smaller time frame off that imbalance. That can be on a 5-minute time frame, a 2-minute time frame, a 15-minute time frame, whatever suits your analysis. You're just looking strictly for a fair value gap. If it's got a breaker block and things like that with it, then absolutely great. There's nothing stopping that from happening. The other one we're going to do is the inverted model. So essentially, if price action is popping down and it does something like this, and it takes liquidity and then it expands aggressively. Let's say, for example, let me do this again. Let's say, for example, and this again is very, very relevant for time and price. Let's say it does that. It takes this liquidity here. Let's say it leaves an area of imbalance right here. Okay. If your area of imbalance has been left, and there's also, let's just say there's maybe a breaker block in here, as an example. If something like this is playing out, then I would always typically say, especially to beginners, wait for price action to break above this level here. And time frames are relevant, guys. This happens, price is fractal. So this is going to happen on multiple time frames. Now, sometimes what you'll find is that price action does just expand to the upside and then retrace onto another fair value gap and then just looks to push higher, meaning we've completely lost this area here completely. What it will typically do on a smaller time frame is it will do something like this, okay? And then essentially you would be waiting for a break of structure, but you won't get it. You'll get it and you will miss the move because it's already happened. If this is happening around your kill zone, London Open, New York Open, what you're going to look for is the sell side imbalance, buy side inefficiency to be violated. So if that there is violated, just like this, let's just pretend this is a candle closing, then you have now got an inverted fair value gap. With your, where is it? With your inverted fair value gap, let's say, for example, this new bit of price action creates another fair value gap or imbalance. Let's say that there happens, but you haven't closed above this area here. You've got no other areas of imbalance it's looking to respect on the sell side. It's just broken buy side. You can expect price action to come back in, retest the inverted fair value gap that it violated, rebalance the buy side imbalance, sell side inefficiency, and then look to move to the upside. And you always, a lot of the time, would get really, really nice moves like this. So you don't have to wait for this break of structure. If you're early on the course, you probably heard me call this a type 2 accumulation. Okay. And that essentially is what we're looking to do. Now, in terms of when this plays out, look, it plays out all the time. But what we're looking to identify is getting in on a certain time. Usually, for me, my preference is if I'm entering on a higher time frame, it's usually between sort of 12 to 2 p.m. UK time. If I'm entering on a really small time frame, then it's all about the kill zone. So it's the New York AM session, it's the London session, it's the New York PM session. And I've got the indicator, which I'll show you the times for those areas there when they play out. But in all honesty, guys, that is how you enter using market structure. That I think the most simple way to do it is the OTE levels. And I'll show you an example. And I think another way of doing it is obviously this way here, which I use more for smaller time frame entries and things like that. And if I invert this back now, you can see the same sort of situation for sales. So you can see that what we're looking to do is enter in a sell. We're looking for the same thing to be created, as you can rightly see right here. There's your OTE trade, and there is your smaller time frame imbalance set up right there. So guys, I'm going to delete this now, but just bear in mind, this is going to be recorded. So when you want to go back and watch this, you can take screenshots and things like that of it. So that'll be there for you. Now, what I'm going to do is just basically head over to the charts. So I already had a really good entry earlier. I actually missed this entry. I spoke about it yesterday, but let's look here at this area here. So you can see here, price has expanded on a 1 hour time frame. Now this was Friday's NFP. You had a big move down, and I put this in the premium section. I actually had an entry right here, and my target was down here for a 4-to-1. But you can see here, it only really gave me a 2-to-1. I actually came out completely just under 2% because I saw price retracing. I was break even. I took partials, and I was stopped out at break even anyway. But again, that was, and the reason I'm entering there is because I knew there was likely to be some kind of reaction. But then you can see the NFP created a massive expansion to the upside. Now, there's a couple of things you can look to do in this situation. You can look to enter straight off the cuff in this area right here, because there's your imbalance, there's your entry, take price there, whatever you want. If you measure this, there's a couple of areas you can measure. You can see it came into the 61.8 level. You could have waited for the 71% level, or you can measure the bodies, whatever's most comfortable for you. You can then see it's coming to the 71% level. Now, what you can also do for extra confluence is wait for smaller time frame analysis. So when you go into a smaller time frame, let's look here at this setup. And like I said yesterday, I was gutted because I actually missed this setup. And this is the sort of setup, personally, I love taking. But look at this on EU. Okay, price actions come in lower. And what we can then notice and see, if I turn on the areas here, you can see here the Asian range has been taken out. We're reacting inside this level here. So we've taken out an area of liquidity, and then we've started to expand. So with that expansion, look at what we've got here. You've got this level right here. You've got that imbalance on a 15-minute time frame. If we measure this entry, again, you're in on the 61.8% level. You're just shy of the 71% level, but with the imbalance, that should be confluence for you to take an entry just there. So you can take that entry there. You can target that area there for a 1-to-1, or you can hold it for a 1-to-2. And you can get 2% out of the markets this way. It really is that simple. If you look at when that happened, it happened twice. It happened in the AM session, and then it came back again and happened in the PM session. So again, it's all relevant to time and price. As opposed to London session, what can you see in here? You can see an expansion in London session, and you can even get in on this retest right here. These entries you can be looking to take every day on different timeframes, and price is fractal, so this keeps on happening. Look at this area here. Okay, we took out this area here, Asian session. Wrong thing. We took out this area right here. Look at that. London session, expansion to the upside. Huge expansion. Price comes down, reacts inside an area of imbalance. You could enter straight away in this level right here. You could enter targeting that area there. You could hold out for a 1 to 2. You could bring your stop above below the candle. You can really do whatever with it. Again, if we measure the bodies of this, you can see it reacted off the 71%. If you measure the wicks, didn't quite make it to 71%. So it might be that you are really entering off the 61.8% because you will get a lot more trades, but your risk reward won't be as good. If you'd have waited for 71%, you probably would have got a 3 to 1 out of it. And again, I didn't take this, I missed this, but let's say, for example, you do end up missing this setup completely and you want to get in on it. Have a look at what it's actually doing before we even have to go down to a smaller time frame. What's it done? What's it done right here? So price action comes in. Price action disrespects this imbalance right here, creating it as an inverse. It's happened straight from a reaction from that imbalance there. Price action has then come back into this area of imbalance. So as soon as that happens, you could be an enterer. You could be playing right in there, targeting that area there. That is happening just before the New York Open. Like, time and price is so big on this, guys. Again, if we go a little bit deeper onto the charts, let's say you missed, well, you want to get a bit more information from this entry right here. Let's look at it. Okay, so you can see the imbalance which is created. Let's say you missed that imbalance entry. Now you're on a 5-minute chart. What can you see from this area here? Because there was another area of imbalance up here, wasn't there? So let's look at, let's say you were really quite strategic and you didn't want to take this second entry right here, because yes, there's an inverted imbalance, but also there's another imbalance right here it could react from. And as far as you're concerned, that's exactly what it did. Let's say you go down the time frame then. Let's see what's going to happen in this area here. Well, now we have inverted this imbalance anyway, so that's been violated. Now we've actually broken a lot of this market structure here. Let's look really deeply. What is going on in price action? Price action is expanding to the upside. So let's now measure this level. OTE levels, 71%, 78%. You could enter off the 71%. You could even enter off the 60%, wherever. You could have your stop loss below these lows here. You could be targeting this area here. You could be getting a 2 to 1. If you hold that, so the highest point, nearly a 4 to 1, you could be looking to get out of this here. And you're doing this, guys, by the way, following one trade setup, one trade in pair. There's multiple entries you can be looking to take. If you miss that entry there, look what happens. Look what happens. Let's say you've missed this entry. So we've missed the first one. We've missed this one here. We've missed this one here. Where's our target? We know we're targeting this area here based on higher time frame market structure. What else can you see? This is so beautiful. We can see another area of sell side imbalance has been turned into an inverse. We can then see another area created. So you could be looking to enter right in here. You could have your stop below that area there for a tighter risk reward. Or you could be a little bit more conservative, come down here, up here, whatever. Profit is profit, guys. Don't be so worried about risk reward ratio and things like that. Profit is profit. And I've just shown you 1, 2, 3, 4 entries within a 12 until 4 o'clock, within a 4-hour time frame, looking at one pair only, purely focusing on one pair before the first target here has even been met. And that's just what happens when you purely focus on one asset. Now, moving into days like today, what can we see? There's nothing really for me here today because, look, consolidation. This is what happens when you get news. This is the 130 news spike. You can see that we broke this level here. Overall, I'm still bullish, but we've been bearish today. So there's really nothing there that I would too interested in trading. I would want to see next. So tomorrow, my ideal situation on a 1 hour time frame is quite simply that price action follows suit. Because look at where we're doing. We are on a 1 hour time frame. We're bullish from this area here. We've been looking to buy. Where's our target on a 4 hour time frame? We're looking to target this liquidity right here. We haven't taken it yet. So now, looking at market structure, something like that is what I'm anticipating. So all I'm doing in this situation here is I'm buying this up to this area here, which is exactly what I drew for you guys earlier. You know, I've got a pending order for a sell at that 4 hour candle right there. So I am buying as high as possible in this area here. Obviously, I'll keep an eye on this liquidity and things like that. But this is going somewhere and it's not looking like it's slowing down. Now, we did have news today. Now, what I'd be looking for in this situation is a push to the upside. Tomorrow, I want some form of fair value gap to be created with this push. So perfect situation, really. Here's what I'm going to do. I'm going to draw it out what I would love to see. More crap coming out during the Asian session. I'd love London session to come lower and then a nice expansion to the upside. If we get that, honestly, measure your area. If there is an area of imbalance anywhere around your 61 to 71% level, take that trade. Take it right there. Target that high. If you miss that entry or you don't want to wait for that entry, you could be targeting this imbalance and being on a smaller time frame for something like that to happen. Again, you could look at one of the possible entries you could be taking. And by the way, just bear in mind, I haven't even gone down to a 1 minute time frame on this. I've been on 5 minute at the very least. So these entries happen. And this is what I'm looking for tomorrow. I'm drawing it out. This is what I want to see. And this is the only thing I'm prepared to do tomorrow because I'm bullish into that area there. Now, if price action completely dumps to the downside in this situation here, well, I need to reanalyze everything that's going on. I need to look at the higher time frames. Why would it possibly be looking to react from this area here? Maybe it just wanted to sweep this liquidity here. Maybe something like that's happening. Maybe in an area of where we are on the daily time frame, we are looking, you know, we're in an area of imbalance or something like that. Maybe we just dump into the downside. I really wouldn't know until it kind of happens. But if we did do that, I'd want to see at least a structure on 4 hour. Give me the 4 hours got to give me a sell to the downside. If the 4 hour does something like that, then suddenly what I'm doing is I'm marking out areas that this could potentially come back up to, areas of inefficiency. So now I'm marking that area there. I'm looking at a 1 hour time frame and I'm waiting for that extra shift. And then I'm going to start selling it all the way to this target here. So that's potentially what I see. We have CPI tomorrow. Yeah, exactly. So, you know, my hope is that essentially tomorrow, the news forces us higher into this area here. So with market structure. So it aligns perfectly with market structure. That's what I'm essentially looking to do with it. And I just want news to basically give it the push it needs to. And if there's news and we can't trade and we miss a perfect trade opportunity, guess what? We miss a perfect trade opportunity. Because let's be honest, right? If this 4 hour time frame comes into this area here and dumps, we could be getting some really nice buys into this area here, waiting for us to sell exactly like we've been doing right here. That's the dump. This is the buying action we've just been doing. And that's all I'm going to do. If I miss an expansion to the downside, I'll just reanalyze it the next day. Because, guys, when you start trading with big numbers, once you start passing funded accounts and you're 2% up for the week, but 2% looks like 5 grand or 3 grand or 2 grand, or you're 5% up and that looks like 5 grand, whatever, suddenly you're not going to be too bothered about trading every day. The only reason a lot of people are trading every day at the moment is because they're on small accounts. And to them, they need to be looking at trying to get 10, 20% on their accounts, which to them is a grand, 2 grand, whatever their income is. I don't know. I don't know your account sizes, but that's essentially what a lot of people are doing. But when you start managing funds of 500,000, 600,000, 700,000, $1 million, suddenly 1% in the markets is going to be plenty to give you the lifestyle that you want. So when you do have news, when you do have things like that, you don't have to be aggressive and trade with these here. You can sit on the sidelines. You can wait until next week.
You know, that's the beautiful thing. If you're up this week, if you're up 5, 6, 7, 8, 9, 10% this week, you don't need to be touching the charts until next week. Know when to walk away from it. That's a real big key. The rules are working on other markets like USD. Yes, so this is exactly the same on NAS. Okay, so the areas that you do on NAS, exactly the same situation. So if we're looking at where we are on NASDAQ, okay, I'm looking for price action to hit this daily area here. It looks like we are close to that daily area. It looks like price action is obviously trying to move to that area. Now look at this 4-hour structure. You can clearly see we're pretty bullish. We've reacted inside that imbalance. We've reacted in that imbalance. We have expanded to the upside in this area here. When we look at a 1-hour time frame, look at the sell side imbalance, buy side inefficiency. The reason we have consolidated and been really crappy with price action today is very much because of news. So let's see what news actually did. News has pushed us to the downside, creating more liquidity. So I'm guessing that's happening because it's going to probably take more moves to the downside. But we've also taken a lot of liquidity out of the market. So I didn't actually really find anything I liked inside this area here because my heart was kind of set on bullish activity to the upside. Now, what I did notice is that this candle here in the New York session today swept this high right here, signaling that we had taken the previous day high. Once we've done that, price dumps to the downside, comes back up, retraces, backs again. By this point, I'm not at the charts at this area here because this is 4:45. I'm picking my kids up from nursery. I've also got a life. But let's look. You can see we reacted inside that imbalance. You could have been a seller in there. You would have been selling against the overall time frame. But for me, you know, that could have been a risk worth taking. You can see, looking at here, price comes in, it reacts in that imbalance. You could have sold in there, maybe sold on this area here, whatever. Now, when you look at what price action did, okay, identifying a liquidity draw is very, very important. Now, on a smaller time frame, look at this. We took the low, and then look at this area here. Price action is coming in, and we've got a couple of things we can kind of look to identify, but we've taken the area there. We've started pushing to the upside. Now, this area here is news. Okay, so that's the news that plays out. Price action comes back into our area here. I did take a small entry on this area right here. My entry was a little bit higher, and the stop loss was there, and I was targeting this high here. In fact, it wouldn't have even been there. I think it was here. I got in, it was about 3 to 1 I ended up getting, somewhere like that. Or maybe I was there and I ended up holding it. But essentially, that is a trade idea in the same situation. You're bullish, you've taken out liquidity, price action's pushed higher, and it's come back into this area here. That is a very simple entry for your area. You could be targeting this area here. You know, you could be targeting the 4-hour high if you really want to. That could have been a 5 to 1 by now. But it's all about knowing when to get out. Because look, price action's come all the way back in, and it started pushing to the upside. Now, again, what's it started doing? It started breaking low. It's just consolidating. Nothing going on that we consider or like in this situation. You know, we can see here, we're just moving around and slowly but surely pushing towards this area here. I think this is going to consolidate over Asian session. I think this is probably going to take out this bottom low tomorrow. But once again, my perfect situation tomorrow, because I want to target this area here, is that price action dumps again and then does something like that. So I can look to get in somewhere in the New York session in around there. Now, if price action pushes higher tomorrow, comes into the daily area, then I'm just going to analyze it. If price action does something like that on a 15-minute time frame, well, then what I'm doing is I'm looking for an area of imbalance or something inside a premium level, which a premium level here is measuring this area here. Anywhere above 50% is a premium level. So let's say we've identified the area there. You can look for price to come into it. You can retrace. That's your OTE kill zone entry. Or you can wait for another area of imbalance to be created to try and enter on a retest to come lower. And that would be using the daily time frame down to a 5-minute time frame based on that happening. So on a smaller time frame, you can clearly see, what we're trying to do. I've really messed up there. But that's what we're looking at. So you can see it here. I'll just draw it again. That's what we want. Now look at this. Look at the selling opportunities, and then look at the buying opportunities. So tomorrow, if price comes up to here and starts moving, it's all about looking for the selling opportunities. See? Same thing on euro. Look at this. Because from a higher time frame point of view, on a monthly time frame, it's doing that. Look at all those beautiful selling opportunities. You just have to know where you are on a higher time frame. See? That's all it is. Then you're coming down and you're identifying sales. Where's the target? Well, we can look to target that area there. Now look, it's still breaking to the downside. Where is this thing looking to go? Maybe it's coming lower. Maybe it's targeting some of these lows. Maybe it's coming right for that low there, because this is the thing now. If we look at the 3-month time frame or the monthly time frame, maybe it's looking to make new lows. Maybe it wants to come all the way down to here. In which case, if that happens, we've got more downward movement to look forward to. And again, I gave away this the other day, guys, but look at the DXY. This is the analysis. It's on the website. You can look every single week. For everyone in this call, I'm doing a weekly analysis. I'm going to tell you which way I think price is going to go each week. Overall, for the next year, I'm anticipating this high gets taken on the DXY, which means what? For the next year or so, and the reason I'm saying the next year is simply because on a smaller time frame, this is a 3-month, each candle is 3 months. So 4 candles is a year. So now what I'm looking to identify is buys for the next year, targeting there, because look, it's bullish. We're in an area of buy side imbalance, sell side inefficiency. We're reacting from that area there. The only thing you have to understand is that we are going to go up and down, up and down, all the way until we reach this area here. We've even got these areas here. We've got these areas here. And you just have to be aware and understand where you are on the higher time frames. Each single day, do you want to be a buyer or do you want to be a seller? And it's just about working out where you think this is going to go. So today was a great day to be a buyer in the end. It happened later in the day though, which is the only thing. So now we're creating an area of imbalance. Does this area of imbalance get pulled in tomorrow? So tomorrow, do we open in this area here, push up here to this high here, and then potentially target the area of imbalance and do something like that? And if we look to respect that area of imbalance, just like this, then what are we going to be looking for the next day? We're going to be on maybe a 1-hour time frame, looking inside that wick for a bit of imbalance in a bullish environment to see if price wants to mitigate into it, and then look to take price even higher because it's reacted on a daily imbalance. Okay, so maybe something like that happens, or it just dumps to the downside and something like that happens. That's what you have to try and look out for, guys. If price reacts to a higher time frame point of interest and gives you a setup, FU, IC candles, etc., but there is an imbalance on a lower time frame below your entry when buying, how do you treat that? Listen, you're not going to miss every single area. So like this here, for example, even on this 4-hour time frame, you're not going to be able to just steer clear of imbalance. You just have to be, like for example, this could come higher and then look to target that imbalance up there, for example. So as long as you're aligned with structure and you've got your overall bias correct, I still think you're pretty safe to take these trades. And like I said, a lot of the time they do happen, but it's all about identifying the expansion. So if you've got an entry here and there's imbalance right here, and this could be on a higher time frame, a smaller time frame, it really doesn't matter in this instance here. So that's your imbalance. let's say we don't come to it, we just expand to the downside. Well, yes, there's imbalance there, but also we've expanded. So actually, this is the high and this is the low. So you have to respect structure. Go with what structure tells you. Or if you're really nervous, just have your stop loss a little bit higher. And that way you make sure you get into profits. And this is why I always say, don't trade news. Because when you trade news, what's likely to happen is price action comes in to your area, triggers you in. This is the 7 p.m. FOMC. Bang, see you later. I'll go into there, but actually I'm going to go in the intended direction anyway. So if your stop loss was here and you entered in here, you've been taken out of the market, but it's gone in your direction anyway. So you're kicking yourself in the pants of why that's happened. And that's just something to be wary of. That's why I say just don't trade with news. Do you use Wyckoff schematics or what you do? So I have a very funny, rigid, backwards opinion on Wyckoff. I've actually got a book on Wyckoff right here, and I do understand it. So when I see a Wyckoff schematic or whatever you want to bloody call it, I understand it. I see it. I can identify it. It is exactly what I teach. Okay. You're looking for areas of accumulation. You're looking for retests and things like that. It is a fancy way of identifying a liquidity break, a break of structure in this area here. It's just a fancy terminology for saying accumulation and distribution. What I don't like is overcomplicating the whole situation. That's what I think Wyckoff does to a lot of people. I know Wyckoff traders who will look at something like this and they'll have so much weird crap on their screen. And I just think, mate, get in for a bloody buy in there. Don't worry about it coming back and testing and retesting and giving you all this type A, type B, type C, type 1001.78251 entry. Stop overcomplicating the whole thing. Accumulation is what we're looking to do. We're looking for a break and enter. When we're looking to sell, very, very simple price action. Once again, we're looking for distribution to enter a sell. Don't worry about Wyckoff. Don't worry about anything like that. If you want to go and learn Wyckoff, you can absolutely go and learn Wyckoff. My one piece of advice to you would be master this simple part of it, because that's the first thing it is. It's accumulation, it's distribution. That's all Wyckoff is. You know, there's certain patterns that you can learn with Wyckoff that can definitely make you successful. But guess what? You can be just as successful learning basic accumulation distribution. You don't need to put yourself through the headache of going over Wyckoff and things like that. And that's why I don't always talk about certain things like COT data, seasonality, standard deviations, and things like that. You don't need it. I will teach standard deviations because you can. The only thing I like about standard deviations is entry targets. So typically when you get a certain price range with a central bank dealers range in the morning on the Asian session range, it usually happens like with 3 standard deviations. So you can kind of pick out a potential target. But other than that, you don't need it. Because if you're looking to get 1%, 2%, 3% in the market, that's enough. Because trust me, guys, learn the skill on a demo account, whatever you need to do. Don't spend and blow your own money. Learn on this account. Learn everything you need to learn. The money will follow. I promise you, because you can learn and get 1%. 1% of your £1,000 account right now, or your 5,000 account. So if you have a £5,000 account and you've got 1%, you're looking 5,000. I'm not very good at maths. 1% is 50 quid, whatever. Like you can make 50 quid now. If you've got a £100,000 account and you're looking for 1%, well, it's £1,000. Like if you do that 3 times a week, £3,000. I think that replaces a lot of people's incomes. Imagine that you've got 4 £100,000, dollar, whatever, funded accounts, because you're so good at the skill that you can now look into multiple funded accounts. 4 funded accounts at 1% each. That's £4,000. I mean, wow, that's that. And say you do that 3 times a week, you're 12 grand a week. 12 times 4 weeks, 48 grand a month. Looking for 1% trades. Like this is why I love trading, because the opportunities that are there for you to make that kind of money really are there without you having to leverage your own money. And this is the mistake people make, is they put live money in. I'm one of those people that have done that. I've put my own money in and I've been completely crucified for it, and you've had to pay for it. And that's when people get in a real pickle. That's why a lot of people lose, because they're not educated in the market. Spend that money on education, learn it, get the best software and do it that way. And then spend that money on getting a funded account, passing a funded account, keeping a funded account. That is what's going to make you successful. And it's just about learning the skill, learning the market structure, learning where you want to take price every single day. And then, guys, trust me, success will follow. Success will follow. The sky's the limit to how much funding you can get. Once you start getting funding, you can start learning, about building your own personal accounts. And you can do what you want. You really can do what you want, guys. So, any questions, guys? Dodds, I'm very happy you're getting value from it, and that's the main aim. I'm happy you're getting value from it. So, that's amazing. That's amazing. So, guys, I'm glad you're looking. I'm interested in mentoring for 6 months. So, look, guys, I've actually got, and I'll repost it. I've got a couple of spaces left for my one-on-one mentorship. If you're interested in that, I will send the link. And you can apply for it. I can't accept everyone. Okay, I can't accept everyone because I'm putting my time into you. It's not free. Okay, please understand it's not free. But what I do, I go on a call with you and I explain the process, how I'll take you through it and that kind of thing. And essentially, to get you to where you kind of want to be and things like that. So yeah, I will only you, or do you ever? No, so it's been mentorship by me. So if you want to be mentored by me, you can DM me for information, or I'll put the application form back on the thing so you can see it and on the announcements. And if you want to apply for it, and I'll get back to you. And the thing is, guys, if you don't take the mentorship going forward, what you can do is you get something out of the call. So we it's a free call where I can essentially take you on the best route forward. If it's not the mentorship, it's not the mentorship. So yeah, it's up to you guys. There's a lot of good things I have planned for it. But I want to make sure I invest my time into that person. So if you are serious and want to do it, and you are keen on investing in yourself to do that, then obviously I'll send it in. But guys, I will love you and leave you. I'll put that in the announcements, so keep an eye on that. I'll do that in a minute. And I think we're back on tomorrow for New York session for the premium members, and I will speak to you on the Discord. Guys, have a great evening, morning, afternoon, wherever you are in the world. And I'll speak to you all very soon. Hopefully this market structure has cleared up a lot. Hopefully you got value out of tonight. I'll upload this overnight. It will come on maybe tomorrow midday, and then we'll go from there. Guys, take care. Have a good one, and I'll speak to you all very soon.